Okay, this is installment number 5 of going through the basics of price action, the secrets, if you will. So, as I mentioned in the last video, we're gonna use this video to start to get into multi-time frame analysis. We talked about candle transitions last video, which is to say, how does a candle go from red to green? How does a candle go from green to red? Incredibly important to understand that, especially when you're doing multiple time frame analysis. And the reason for that is the way a candle is transforming on one time frame can tell you clues about what's likely to happen to it on a higher time frame, or vice versa sometimes. And so I'll orient you here first. What we have, the way this chart, this is set up, the upper left-hand corner here is a daily chart, and I'll change this to SPX. So this is your daily chart. This is a weekly chart. This is a monthly chart. Well, that's a daily chart now, but I'm going to change it to a monthly chart. And we'll change this to a quarterly chart. So every candle in this chart is a day. Every candle in this chart is a week. Every candle in this chart is a month. Every candle in this chart is 3 months or a quarter. And you can always see that by what's in the upper left-hand corner. So you see it says 1 day, see it says 1 week, 1 month, 3 months. And so we're looking at the same, so this is all the S&P 500, but we're looking at it across all the time frames at the same time. So some observations, and again, remember the idea that candles are red if they close lower than they open, and they're green if they close higher than they open. And so it's 3:43, so just less than 20 minutes left in the trading day on a Friday. So what's happening right now is this daily candle is 17 minutes away from completion, right? In 17 minutes, this candle will be complete. This candle will close. It will be done. Everything, like this candle won't be able to change anymore. The same way that this candle, and I'll zoom in here so that it's easy to see. Like this candle, which was yesterday, at 4 p.m. on the dot, this candle closed. It stopped forming. It like solidified into what it was going to become. And that's how it looks. And so in now 16 minutes, we'll get the final form of this candle, because we're ending the day, and this is a daily chart. On the weekly chart, we're also going to get the final version of this weekly candle, because today is Friday, and it's the last day of the week. And this is incredibly important to understand, right? When two time frames coincide, right? When they coexist, so they overlap, I guess is the word I'm looking for. So Friday is a perfect example of that, where the weekly candle for S&P is going to close, or any stock or ETF, because they only trade 5 days a week. So the weekly candle is going to close, or it's going to fully form. So this is our weekly candle. It looks very bullish, right? To go back to thinking about what a bullish candle looks like versus a bearish candle. Look at all these candles. What do these look like to you? Bearish. Why? Because they're red, right? Just quickly glancing at them, you can say high level, it's bearish because they're red, right? We've had 1 red candle, 2, 3, 4, 5, 6, 7 weekly red candles in a row. So very bearish, right? And now we've got our first green candle in a while, and that is very bullish. And this candle is going to close now in 15 minutes, and it will be like the final version of what it's going to look like. So that's the weekly candle. And now if we look at the monthly candle, this is important to understand as well. So the look of this candle, where it has a very skinny body, a very small body, is because it went from from being very red to now being slightly green. What the hell do I mean by that? Well, it's simple. You'll always know, like whenever I hover over a candle, you can see the stats for the candle here. open, high, low, close. It's always in that order, OHLC. And so as I hover over this candle, you can look at this right here as I'm hovering over the candle. So the high for this candle, or excuse me, we'll start with the open, OHLC. The open for this candle was 41.30. Well, forget the cents. It was 61 cents, but let's forget that for a second. So the open was 41.30. The high was 43.07. So we managed to go almost 200 points higher than where we opened at one point in the month. That's bullish. However, the low is 38.10. So we have managed to go about 300 points lower than we opened, and we went about less than 200 points higher than we opened. That's a really ugly day, right? Because it means we went really far to the downside, we went slightly to the upside, and now we ended up very close to where we opened, because we're right now at 41.44. So we're only 14 points higher than where we opened for the month. And because today is May 27th, if I'll pull up the calendar here, I guess that doesn't work. We have, so we'll have one more trading day of this month, which will be Tuesday, the last day of the month, May 31st. So whatever happens on that day, that's going to close out this candle. And then on Wednesday, June 1st, a new monthly candle for June will open. And then we'll kind of start that time frame all over again. So I hope you're following this. It's really important, right? So because it's a Friday, we're coming to because it's almost the end of the day, this daily candle is almost closed. Because it's almost the end of the week, this weekly candle is almost closed. Because it's the end of the month, it's not the end of the month, it's close to the end of the month, we're getting close to the monthly candle closing as well. And this is your quarterly candle. Again, same exact principle. Well, think about how the quarters work, right? The first quarter ends on March 31st, which means the second quarter starts April 1st. And we're about to end May. So we're about to end the second month of the first or the second quarter. So this was all of Q1. I'll zoom in. This was all of Q1, and this is now where we are in Q2. And so next month, the month of June, will be the last month of this quarterly candle. So when June closes, this candle will also close. So right now, there are a lot of possibilities for this candle. If you think back to the previous material around candle transitions, think about that. So we'll go to sort of review somewhat briefly. The opening price for a candle is always the starting point, and everything revolves around that. And so let's zoom into this May candle. I want to make sure that you can really see exactly what I'm talking about. So this is this is your April candle. That doesn't make sense. Oh, I'm sorry, brain fart. This is a quarterly chart, not a monthly chart. So this is your Q2 candle, this is your Q1 candle. And so if I zoom in here, Q1 opened here, right, where this body is. And so if I look, again, I can always see the stats here. So Q1, that's blocking. So Q1 opened at 45.40. So we're obviously way below that now because we're, down here less than 4,200. So we're quite a bit below where we opened the quarter. But imagine if we had a crazy rally in June where we rallied all the way back to 45.50, let's say. Remember, we opened at 45.40. That would mean that this ugly eyesore of a red quarterly candle would turn positive, right? Once we get above 45.40, it becomes positive because we would get above this point here and we start to become a green quarterly candle. A lot could happen in a month, and that's possible. I think that's highly unlikely. And in the same regard, this lower wick that we have, so the low for this month was 38.10. It's the same low that we talked about for the monthly, right? We could make a new low next month, right? What if we traded next month all the way down to 3,700? That would mean that this wick would disappear. This would just be red, 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 and it would stretch all the way down to 3,700. That's how the candles work. And think about that. As this quarterly candle is continuing to form, it's being impacted by whatever the June candle is going to do, whatever that's going to look like. So these are the major time frames I like to look at: daily, weekly, monthly. I look at the quarterly, and I also look at the 12-month. So this chart in this chart, every candle is actually an entire year. So like you can easily go back all the way to 1870s, right? And look at what each of these is 1 year of price action. This is your Great Depression. I mean, you can see these red candles. That's your top in 1929. Then you had a red year 1930, red year 1931. The bottom came in 1932, and then we had a reversal. We're going to go back to this chart when we get to the more advanced stuff and we start to analyze higher highs, higher lows, lower highs, and all that stuff. But for now, I'm really just focusing on the multi-time frame analysis aspect. And so this annual candle, I'll zoom in here. This is all of 2022, and this is all of 2021. And so one thing we'll want to watch for is, oh, I can't do that. I will revert that change and then hide. One thing we'll want to watch for is the low from last year was 36.62. I suspect we're going to trade down there, maybe probably undershoot it, and that's going to give us a new low on the yearly chart. And that's important. That's what multi-time frame analysis is all about. Understanding what is happening on each time frame and how that's impacting the time frames above and below. And you're keeping in mind, things happen on the lower time frames and then cascade to the higher time frames. And this may not make as much sense now, so we will review it again later. But I'll use this as an example. You see this low candle here? So this here. This low candle on the daily chart is the low that caused this on the weekly chart. And this on the weekly chart is what caused this low on the monthly chart. And this low on the monthly chart is what is causing this low on the yearly chart. And this low on the quarterly chart is what's actually causing the low on the yearly chart, which is being caused by the monthly. I hope you're following there. The point there is that the lower time frames, if they get followed through, like if they get bullish follow through, then it becomes bullish on the higher time frames, and each time frame gets bullish kind of in turn. And so that's incredibly important to understand. What we haven't looked at is any time frame below the daily, which we will look at in future videos in more detail. But I'll zoom into a very low time frame now, which is a 5-minute chart. So this is live right now because the market is still trading. The market actually has about 5 minutes to close. And so I'm going to zoom in on this so you can. So this candle is literally in the process of forming right now. You can see it just went from red to green. I hope you saw that. It's this candle right here, this bad boy. So this is about to close, and you can see the countdown right on the right-hand corner. It's about to close in 5 seconds. 4, 3, 2, 1. New candle. See that? See this new candle? These are 5-minute candles, which means you would get a new candle every 5 minutes. So each of these candles is 5 minutes of price action. So this is a red candle, which means for this 5-minute time period, we opened here and we closed here. So we closed lower than we opened, which is why the candle is red. And you can see this new candle is green. It's continuing to be green. It's moving up. It's going to close in 4 minutes and 31 seconds. I'm going to zoom into the 1-minute candles. Ooh. Now, how many 1-minute candles do you think are in a 5-minute candle? That's right. It's not a trick question. It's 5 candles, right? A 1-minute candle is the same thing as a 5-minute candle, except you've now cut the candles into 1-minute increments. And so we can see the last 3 1-minute candles have been green, which is what is causing these 2 green candles on the 5-minute chart. Multiple 1-minute candles make up a 5-minute candle. Multiple 5-minute candles make up a 15-minute candle, which makes up a 1 hour candle, which eventually makes up a daily, which, you know, combines into a weekly, monthly, quarterly, annual, etc. Incredibly important stuff. I'll hold it here. We'll definitely do some more live candle looks, but take a minute to review this content. Go in. I would really encourage you, log into TradingView yourself or any platform you want to use, and try to set this up. And so you can set this up like this. There's a grid. I actually, for some of my live trading, I like to do 6 panels. So this is the futures, and these are smaller time frames because I was trading on a smaller time frame. So this is the 1 minute chart, 3 minute chart, 5 minute chart, 15, 1 hour, and 1 day. I'm usually really looking at the 1 hour and 15 minute. It depends on how volatile the action is. I might zoom in to like the 1 second, or excuse me, the 1 minute or 3 minute. There actually are even 15-second candles, right? Look at all these 15-second candles. Again, the more volatile the action gets, the more important it is to zoom in at these little microscopic time frames. But I'm rarely looking sort of this closely, this deeply. This is like a really important sort of foundational sort of concept. So again, please review this content, practice a little bit, and remember, crypto trades 24/7. So that's a great practice tool to look at the different time frames, how the 1 minute candles are forming to create the 5 minute candles, how those are cascading into the 1 hour, the 8 hour, and you can create any time frame you want: 2 hour candles, 1 hour candles, 8 hour candles, 4 hour candles. People sometimes think they can create unique time frames and that gives them an edge. It may or may not. It depends on how you're using it. But time frames, combining them, that's the alpha. And again, remembering, action happens on the lower time frames and then it cascades to the higher time frames. So looking at the lower time frame gives you a clue as to what's going to happen, right? Like by looking at these little 15-second candles, the minute I see a few green 15-second candles, that might suggest that the 1 minute, 5 minute charts may start to get the first minute I start to see some red. Like it maybe give me a hint that the 1 minute, 5 minute, even 15-minute candles are going to start to get some red in them, because the 15-minute candle can't go red until some 5-minute candles can go red, right? Like think about that, right? The higher time frame can't get bearish until the lower time frame does. And so that becomes really important when you start to try to spot reversals. You want to go to the appropriate time frame. Like, am I trying to spot a reversal on the 1 hour time frame or the daily time frame? Or is it such a long-term reversal that I want to be really conservative and wait for a weekly reversal, right? I want to wait for a signal on the weekly chart, but potentially. So we'll leave it here. Much more to review in the next installment, but please focus on this because this is going to really be the kernel of a lot of what we're going to review in the future.